Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Zacks Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Dave Bartosiak for this week's episode, where we're bringing you two tech stocks, and including one social media company that's under fire, but is still a Zacks #1 ranked strong buy. What is it? It's the one I'm going to talk about, so let's get right to it. So my stock is Facebook, ticker FB. Now, I own this in my own personal portfolio, and I'm sure maybe some of you own it too. You know, a lot of us bought it way back when they went IPO, which is almost a decade ago now. And so it's been up and down for the stock, but the company has really been executing well in recent years. So look at what they're doing with just the sales. Here in 21, expected to make $108 billion in revenue this year. And that's up substantially from even the pandemic year last year, which was an election year, up from 85 billion last year. That's 26% earnings or sales growth for the year. And you see it again here next year here with another 19% expected in 2022. These are amazing growth levels for a company that is generating this much revenue. For large cap companies, it's hard to do even double digits, let alone over or close to 20%. So this is impressive. Then you have the earnings estimates here. Last year they made 1009. This year expected to make 1128 up here. And that's 11% on the earnings growth side. And then another hot year expected in 2022 here with another 20% on earnings growth. Then let's take a look at what is actually happening with the analysts right now. So as you can see right here, 18 of the analysts have raised in the last 30 days. That's coming off of their earnings report, because yes, it was that good. So everybody's in agreement for the full year that things are looking much better, and they all had a revise higher. And at the same time, they're revising for 2022, expecting some of these trends to continue moving forward. Now, I know what you're thinking. Facebook's been all in the news recently with this episode happening in Australia with the news, kind of dispute about whether or not they have to pay for the news that they have on their platform in Australia. So they've just removed the news off the platform. But you can see there's a lot of pressure on these big social media companies now, both on that revenue side, on advertising, on, free speech issues. The FTC is looking into Facebook as well here in the United States. And there's possibilities that they could be split into Instagram, Facebook, WhatsApp. They have several different divisions, as you know. So that could all be spun out, but that's all in the future and unknown. But the analysts don't care. They're still raising here based on the current facts as we know them right now. And that is the underlying business is doing very well, even with all this other stuff going on and with the distractions. And these earnings revisions is how we're getting the Zacks #1 ranked strong buy. Now, I also brought the chart so you can kind of see what's happening with the earnings growth over the last several years, and it is not letting up, as you can see. It's just going in the right direction. This is what you want. It had a little bit of a dip with the pandemic, but has now resumed up to now 5-year highs with the earnings growth. Now, what does the chart look like? You can kind of see the chart on that 5-year chart, but also on this 2-year chart. So it sold off at the start of the pandemic like everything did, and then got the boost off. But since basically last summer, it's been kind of trading sideways here like a lot of these large cap technology stocks are doing. So over the last year, shares are up 23%, which is beating the S&P 500, which was up 17% during that period. But over the last 6 months, it's down 2.6%. And then the 3-month, it's down 3.6%. And then over the last month, it's been down about 5%. And as a result, as those earnings estimates are being raised, but the stock really isn't going anywhere or is down a bit here, it trades with a forward PE of just 23 now. Now, that is not the cheapest it's been in the last several years. It did trade around 20 times at the time when it had that bad PR privacy issue happening a couple of years ago. Remember that downturn? But the shares rebounded off of that and it got more expensive. But now it's trading at 23 times. That's the cheapest of the FANG stocks. All the rest are over 30 times. So is Facebook a value stock? I've been asking this question recently, and I feel like if it breaks down further here, instead of breaking up, then you really are looking at possibility of a buying opportunity and a value here. So keep that in mind when you're thinking about Facebook. You don't get a dividend. It's all about the shares here, but they are producing the cash, and things are looking up even with all these troubles that they're encountering globally. So Facebook, one to keep on your watch list for sure of the Zacks #1 ranked strong buys. And now I'm going to throw it over to Dave for his tech company and the good news coming out of that.
Thanks, Tracy. And I've got a top stock pick of the week for you. It's Alpha and Omega Semiconductor, ticker AOSL. Let's go ahead and take a look here on Zacks.com and see why I'm naming it my top stock pick. First of all, it is a Zacks rank #1 strong buy. Love seeing that. Taking a look at the style scores, we have a value style score of C, growth of A, and momentum of A to help it round out with a VGM composite score of A. It is in the electronics semiconductors industry, which ranks in the top 17% of our Zacks rank. So that means it's not only this company, but a lot of companies within the same industry that are really rocking and rolling. I don't know if you folks have heard about the chip shortage that's going on. That's something I'm going to cover tomorrow in my trending stocks video, so be sure to check that out. But basically, there's a global shortage in microchips, which is great for companies like this. Take a look at this current year revenue growth, 35.18% year over year. That's fantastic. Next year is supposed to reel in quite a bit, though, down to 3.95%. And if you take a look at the earnings story, very similar. 167% earnings growth this year and virtually none next year. I would not be surprised if you end up seeing estimates push in a positive direction and move those earnings upwards. If you look over the course of the last 30 days, we've had two analysts increase their estimates for the current quarter, next quarter, current year, and next year. And you can see the impact that's had on our Zacks consensus estimate. $178 to $235 for the current year, $193 up to $235 for next year. I suspect that number is going to get a little bit bigger. Last thing I want to show you folks is the price consensus and EPS surprise chart. Now, it's easy to take a look at a stock that's gone from 6 to 40 and say that it's overdone. But I want you to look here. These multicolored lines represent the evolution of our Zacks consensus estimates over time. Notice how they bottom out here at the start of the year and then essentially skyrocket upwards. And you're seeing that not just for this year, but also for next year. So this isn't a stock that's going up for no reason. This is a stock that's going up because earnings are on the rise, which is a very good thing. And that's part of the reason why it is a Zacks rank #1 strong buy and my top stock pick of the week. So that's all we have here for your top stock picks of the week. Be sure to check out Zacks.com/promo so you can see this week's promotion, which is the home study course. Be sure to check that out, and we'll see you all next week. Have a good one.